Shoprite was founded in 1979 with the purchase of 8 Cape-based supermarkets. Its operating subsidiaries include Checkers, House and Home, OK Furnishers, Computicket and Hungry Lion. It has a market cap of 102 billion rand, a price-to-earnings ratio of 29 and a dividend yield of 1.7%. Well, the case in point, a price-to-earnings ratio of 29.
Yeah, but look at that share price. I mean, that it's now perked its head out above the 100 billion market cap number. Amazing story, amazing. And established just the other day by Wati Basson and his colleagues. But remember, they were early on a number of things. They were early to do distribution centers. They were early at the revolutionary idea of paying their suppliers on time. You'll remember that in the old days, they used to say, oh, these retailers don't make any money from selling things. They just make money from borrowing money from their suppliers. Because you know what it's like, they get cash on the point of sale, and then Pick and Pay would be the one everybody used to talk about how much money they made, because they then only paid their suppliers after 90 or 120 days, if they were lucky. But Shoprite, first into Africa, first to do all of the technology-driven merchandising and stock control. So it's no wonder they've been as successful as they've been, and they've taken massive market share. So it's a stock everybody loves. I don't know, you can't say anything bad about them. So
they're playing really on that first mover advantage within the African continent, doing quite well in terms of when you look at their earnings from there.
Yes, they grew, I think, up to 25% on earnings outside of South Africa. Obviously off a lower base, but looking very good at the moment. They started to go into Nigeria. It's difficult to get a distribution network in Nigeria. You have to own the land for distribution, and it's difficult to get. But so far they look like they're doing well. And they're already in Namibia, obviously, and the peripheral outside of South Africa, and doing well.
So looking at the share price, it's up over about 34% compared to a Pick and Pay, which is down about 8% at this stage. Would you be getting in right now?
You have to carry on backing them. I think you're paying a slight premium for Wati Basson and the management team there. They've got everything right over the last few years, and you're paying a little bit of a premium for it. Now that Pick and Pay's got a new CEO, do you change across? But at the moment, I think you still have to own Shoprite.
All right, Paul, hot or not this one?
Yeah, I think so. I mean, they've continuously delivered solid growth. Even in sort of a bad year, they've delivered 20% or thereabouts growth. As you alluded, and Rob as well, they've started to enter these mega markets like Nigeria and so on. There are lots of challenges, and they always said it's very tough to obtain good space. Conversely, here in South Africa, it's very easy to obtain good space because all those property developers have been building new malls around all the secondary towns as well as the big ones. So I think they'll continue to do well, and I think more importantly, they'll continue to get the support of the foreign investor base that compares them to other operating environments. So I like them. I think you do run the risk of a little bit of a setback perhaps in the investor climate, or maybe a bit of a downturn, or maybe interest rates start to go up. But for long-term investors that are patient and want good vehicles to ride the ongoing African growth story, I think you can certainly be in here. So it is still hot.
And Rob, so hot for you, Paul. Rob, are you hot or not on it?
Yes, I'm hot on it still. I think also if you take a look at the inflation that they're running at Shoprite, they're only running at 4%. So they've still got quite a bit that they can push onto the consumer compared to a lot of the others. So definitely hot on it.
So 2 hots on Shoprite.